Two retirement accounts, two completely different worlds. One has $500,000 saved after decades of work, the other has $1 million. Both seem like substantial amounts, but the retirement experiences they provide are shockingly different. Today, we're going to break down exactly what retirement looks like with $500,000 versus $1 million. The numbers will surprise you, and by the end, you'll know exactly what you need to plan for your own retirement. Let's start with some eye-opening statistics. Only 9% of American households have saved $500,000 or more for retirement, and only 2.5% of Americans actually have $1 million or more in their retirement accounts. This means if you have $500,000 saved, you're already ahead of 91% of Americans. If you have $1 million, you're in the top 2.5%. But being ahead doesn't mean you're safe. The average retiree household spends between $50,000 and $60,000 per year. Some spend as little as $24,000, while others spend over $84,000 annually. The question becomes, which category will you fall into? And can your savings support that lifestyle? Let's dive into what $500,000 actually provides in retirement. For decades, financial advisors have recommended the 4% withdrawal rule. This rule suggests you can safely withdraw 4% of your portfolio in the first year of retirement, then adjust for inflation each year after. But here's important news. The creator of the 4% rule recently updated it to 4.7% for 2025. Using the updated 4.7% rule, a $500,000 portfolio allows for $23,500 in withdrawals during the first year of retirement. That breaks down to $1,958 per month. Now let's see how this stacks up against actual retirement expenses. According to the Bureau of Labor Statistics, the average retiree household spends $57,818 per year. Let's break this down into monthly categories. Housing takes the biggest bite at $1,719 per month. Transportation costs $681 monthly. Healthcare runs $628 per month. Food expenses average $609 monthly. These four categories alone total $3,637 per month. The $1,958 monthly income from a $500,000 retirement portfolio doesn't even cover these basic four expenses. There's a shortfall of $1,679 every single month. This is where Social Security becomes crucial. The maximum Social Security benefit for 2025 is $5,108 per month, but the average benefit is much lower, around $1,900 monthly. Even with the average Social Security benefit, total monthly income becomes $3,858. This covers the big four expenses with just $221 left over for everything else. Taxes, entertainment, clothing, insurance, and unexpected costs. The math is tight, very tight. This explains why 27% of retirees report spending more than they feel they can afford. With $500,000, retirement becomes a careful balancing act of cutting expenses and hoping nothing major goes wrong. Now let's examine what $1 million provides. Using the same 4.7% withdrawal rate, a $1 million portfolio allows for $47,000 in first-year withdrawals. That's $3,917 per month from retirement savings alone. Add in Social Security benefits of $1,900 monthly, and total monthly income reaches $5,817. This completely changes the retirement game. The average retiree expenses of $4,818 per month can be covered comfortably with nearly $1,000 left over for discretionary spending, travel, hobbies, or building an emergency fund. But the difference goes beyond just having extra money. A $1 million portfolio provides options. There's flexibility to live in higher cost areas. Better healthcare options become affordable. Family members can receive financial help when needed. Expensive hobbies like golf or travel become possible. Most importantly, there's a buffer for unexpected expenses. Remember, healthcare costs alone average $172,500 throughout retirement for someone starting at age 65. That's a massive expense that can derail a tight budget. With $500,000, this healthcare cost represents 34% of the entire retirement savings. With $1 million, it's only 17% of the total portfolio. The psychological difference is enormous too. A $500,000 retirement requires constant worry about money. Every purchase requires careful consideration. Every unexpected expense creates stress. A $1 million retirement allows for better sleep at night knowing there's financial cushion. Healthcare represents the biggest wild card in retirement planning. The numbers are staggering and getting worse every year. A 65-year-old retiring in 2025 can expect to spend $172,500 on healthcare throughout retirement. This figure comes from Fidelity's annual study, and it only covers Medicare premiums, deductibles, co-payments, and other out-of-pocket costs. It doesn't include long-term care. Medicare Part B premiums alone cost $185 per month in 2025, up from $174.70 in 2024. That's a 5.9% increase in just 1 year. Healthcare inflation consistently outpaces general inflation, meaning these costs will likely grow faster than other expenses. For a $500,000 retirement portfolio, healthcare costs create a serious problem. Setting aside money for the expected $172,500 lifetime healthcare cost means over one-third of the entire retirement savings goes to medical expenses. This leaves even less money for daily living expenses. A $1 million portfolio can handle healthcare costs more easily. The $172,500 represents about 17% of the total savings. There's also room in the budget for supplemental insurance policies that reduce out-of-pocket costs. Options exist that simply aren't available with smaller portfolios. But here's where it gets really scary. The $172,500 figure assumes average healthcare needs. What about chronic conditions? What about long-term care? The average cost of a private room in a nursing home exceeds $100,000 per year. A single year of long-term care could wipe out an entire $500,000 retirement savings. Location dramatically impacts how far retirement savings stretch. Housing represents 35% of the average retiree's budget, making it the single largest expense category. This means where you live can make or break your retirement plan. Consider the difference between retiring in San Francisco versus retiring in Tulsa, Oklahoma. The median home price in San Francisco exceeds $1.3 million. Property taxes, utilities, and maintenance costs are proportionally high. Even owning a home outright, the ongoing costs can easily exceed $2,000 per month. In Tulsa, you can buy a nice home for under $200,000. Property taxes are lower, utilities cost less. The same $500,000 retirement savings that feels inadequate in San Francisco might provide a comfortable lifestyle in Tulsa. This geographic arbitrage becomes crucial for people with smaller retirement savings. A $500,000 portfolio might struggle in expensive coastal cities, but could provide comfort in lower-cost areas. A $1 million portfolio offers more flexibility. There's choice to stay in expensive areas or move to lower-cost regions and live very well. Many retirees don't realize they can dramatically improve their financial situation simply by moving. States like Florida, Texas, and Tennessee don't tax retirement income. This can save thousands of dollars annually. Moving from a high-tax state like California or New York to a no-tax state can effectively increase retirement income by 5% to 10%. The lifestyle differences between $500,000 and $1 million in retirement are profound. These differences affect everything from daily decisions to long-term planning. With $500,000, retirement becomes about careful budgeting and making tough choices. Dining out becomes a special occasion rather than a regular activity. Vacations require months of planning and saving. Home repairs and maintenance become major financial decisions. Every purchase gets scrutinized. The entertainment budget for a $500,000 retirement might be $200 per month. That covers streaming services, occasional movies, and modest hobbies. Compare this to a $1 million retirement that might comfortably support $500 or more monthly on entertainment without affecting financial security. Transportation decisions also differ dramatically. A $500,000 retirement might mean driving the current car until it dies, then buying a reliable used vehicle. Expensive repairs require careful consideration and might lead to choosing to live without a car in some situations. A $1 million retirement allows for replacing cars when desired, not just when necessary. Newer, more reliable vehicles become affordable, reducing the stress of unexpected breakdowns. Gift-giving and family support represent another major difference. Grandparents with $500,000 might give modest gifts for birthdays and holidays. They'll think carefully before helping adult children with down payments or emergency expenses. Those with $1 million can be more generous without jeopardizing their own security. Travel represents perhaps the biggest lifestyle difference. With $500,000, travel becomes limited and carefully planned. Road trips replace flights. Budget hotels replace luxury resorts. Domestic travel replaces international adventures. With $1 million, travel options expand dramatically. International trips become possible. Comfortable accommodations become affordable. Travel can happen more frequently and with less financial stress. If you're approaching retirement with around $500,000, don't panic. You have options, but they require careful planning and strategic thinking. First, consider delaying retirement by even 2 or 3 years. This accomplishes multiple goals. Your portfolio has more time to grow. You can contribute additional money to retirement accounts. You delay the need to withdraw money, allowing compound growth to continue. Most importantly, you delay claiming Social Security, which increases your monthly benefit by approximately 8% per year until age 70. Second, seriously evaluate your housing situation. If you own an expensive home, consider downsizing or relocating to a lower-cost area. The equity from selling an expensive home can significantly boost your retirement savings. Moving to a state without retirement income taxes can effectively increase your income by thousands of dollars annually. Third, plan to work part-time in early retirement. Even earning $1,000 per month from part-time work can dramatically improve your financial situation. This income can cover discretionary expenses while preserving your retirement savings for essential costs. Fourth, maximize your Social Security benefits. Understand the claiming strategies available to you. If you're married, coordinate with your spouse to optimize both of your benefits. Consider the tax implications of different claiming strategies. Fifth, be aggressive about healthcare planning, research Medicare supplement policies, consider health savings accounts if you're still working. Plan for long-term care insurance while you're still healthy enough to qualify for coverage. With $1 million in retirement savings, you have more flexibility. But smart planning still matters. Your strategies focus on optimization rather than survival. First, consider tax-efficient withdrawal strategies. With a larger portfolio, you likely have money in different types of accounts: traditional IRAs, Roth IRAs, and taxable accounts. The order in which you withdraw from these accounts can significantly impact your tax burden and the longevity of your savings. Second, think about estate planning and legacy goals. With $1 million, you might want to leave money to heirs or charities. This affects how aggressively you can spend in retirement. If leaving a legacy matters to you, you might use a more conservative withdrawal rate. Third, consider long-term care insurance. With more assets to protect, insurance becomes more valuable. You have more to lose if you need expensive long-term care. Fourth, explore investment strategies that provide income. With a larger portfolio, you might consider dividend-focused investments, real estate investment trusts, or other income-producing assets that can supplement your withdrawal strategy. The difference between retiring with $500,000 and $1 million isn't just about having twice as much money. It's about having completely different retirement experiences. With $500,000, retirement requires careful budgeting, strategic planning, and often some lifestyle compromises. With $1 million, retirement offers more choices, greater security, and the ability to handle unexpected expenses without panic. But here's the most important point. Both scenarios can work. The key is understanding what your savings will realistically provide and planning accordingly. Don't let these numbers discourage you if you're behind on savings. Every dollar you save makes a difference. Every year you delay retirement helps. Every strategy you implement improves your situation. The worst mistake is ignoring the reality of retirement costs and hoping everything will work out. The best decision is facing the numbers honestly and making informed choices about your future. Whether you're on track for $500,000 or $1 million, start planning now. Understand your options. Make strategic decisions. Your future self will thank you for the effort you put in today. If this video helped you understand retirement planning better, please subscribe to Frankie Finance for more practical financial advice. Like this video if you found it valuable. Share it with someone who needs to see these numbers. And leave a comment below telling us about your retirement planning journey. What questions do you have? What strategies are you using? Your comments help us create better content for everyone.